From meme to utility, Floki has it all. NFT metaverse game called Valhalla. Floki University, DeFi, charity, and shopping. Floki is governed by the people, for the people. Floki, together there is no stopping us.
Good afternoon, everyone. BC Richfield here, coming to you live from London the day before our 5th annual Free Trading Congress event, and a little bit of an impromptu live stream today. So I appreciate we might not have tons of viewers for it, but hopefully we can rip through some alts today. I just really wanted to kind of jump on the charts with you guys. I know a lot of things have been popping off. We had an amazing analyst meeting last night where I get together with the rest of the trading team at the Bird Nest, and we sit down and review the market. And I think one thing that was really clear was the feeling that, a lot of these pairs feel quite overextended right now. Hey, afternoon, Julian. But, sometimes we also need to bring other elements into context here, right? And you'll hear people say this a lot, and it's quite hard to quantify it sometimes, right? But you'll hear people say, God, when these alt rallies or these crypto rallies take off, sometimes they just don't come back. People are looking and hoping and waiting for levels to be retested that just don't get retested. So what do we do in those situations? Well, for me, if I'm ever kind of slightly pushing my risk parameters, the first thing that I do is I just downsize my position, right? So if my average risk is, say, 1% of my account, then I would downgrade that to 0.5. If it was 0.5% of my account, I would downgrade it to 0.25%, so on and so forth, right? But something that was really interesting, and one of the great things about working in a team is taking on board other people's opinions, right? Now, I don't really have the biggest exposure to altcoins. As anybody that follows the channel knows, I'm very much a kind of intraday trader with a focus on, Bitcoin, Ethereum, some of the larger alts, but mostly kind of traditional markets as well. So what I wanted to take a look at today was just quickly ripping through some charts. If you guys have some alt requests, we're only going to make it a quick 30-minute show. I know we had somebody message into the channel. Let me just get my Twitter up very quickly, asking for a request. Let's have a look who that was from. Saitama, I think it was. Saitama. So I don't know if you're on the stream at the moment, Nick, or if you can get on there, but I will try and take a look at that for you. Just trying to look up what the ticker is for it, actually. SAIT. Okay, let's take a look. Add that to the list as well. And let's see what we can dig up. If you are here, Nick, do pop and say hello, and then we can... Robo Monkey, awesome. And Robo Coppo, what's up? Hey, guys, really, really good to see you guys on the live stream. So we're just going to rip through a few alts, or we can do traditional markets as well if you want, guys. But just to give you a few quick thoughts here on LDO, which was brought to my attention by a really good friend of mine, a fellow trader and immense graphic designer, QBS. So... looking at this quickly, I just kind of outlined the key things. The line that you see on the chart here is just one of many features from BPro, right, which is our in-house indicator. So we can turn that on or off. What you can see, though, is, and I've got this set to a daily time frame at the moment, even though I'm on the daily, is that when you're using this as just a kind of overarching indicator of trend, look how long this kept you basically the right side of the trend here. So if you were trading this on a daily basis... until it broke here, you would be mostly right the majority of the time through. So you had 59 days that it caught that bearish trend for, and actually from the very top of that was only 78 before it broke. So sometimes, especially when you're looking at things like this, it can help to have that kind of visual aid. It's not something that I use below the higher time frames, but I know some people, especially Jimmy, your NLP coach, a great little trader and also trading psychologist, uses to great effect. But sometimes it can help give you that kind of visual representation on the charts. However, let me just turn it off quickly so everything's really nice and clean. Right. Peace, Sniper. Oh, man. Good to see you back. Welcome. And Gio, quick question about calls only subscription. Is the analysis you just mentioned shared with members as part of that tier? Yes. So basically, all of the calls that go out from our membership group are done in a way that give you the reason for the call, the entry, the stop loss, the take profit levels, why the take profit levels are there, where we would look to move our stops up. Also, all of the analysts have their own private channels, but quite often what we do is a lot of the stuff is shared in the Nest Club chat, the exclusive Nest Club chat, where we'll kind of share ideas, trading setups between the analyst team. Obviously, we've got analysts that work all over the world. As far from myself in Canada, people in the beautiful and wonderful Holland, stretching all the way through Portugal to Canada, South America, Eastern Europe as well, of course. So, we have a pretty decent coverage. But yeah, you get the analysis, you get the breakdown, you get that as well. And also as well, there's a lot of really good ways to do it at the moment, because you can sign up for free for Congress, right? You can see the link down in the description. We got loads of speakers coming on. The day one speakers have been announced. So yeah, take a look at that, because while you sign up for this for free, you actually get access to all of our paid services for free as well for the whole of Congress. So that's from tomorrow through to the 21st. Gives you a great way to kind of get involved with the community, find out if it's something for you or not. If it's not, no problem at all. It's not something that's going to be for everyone, but obviously, it is for a lot of people. And if it's of interest, go and check it out. I'm not here to shill that. It's just something that we're all excited to be a part of. To the moon, Andre. Yeah, absolutely. So before I digress too much, we've only got kind of 20 odd minutes left on the stream. Let's take a look. Now, for me, this is a really clear and obvious high here. Now, we're working on the premise that price is looking to do two things mainly, right? Or almost always, right? It's looking to attack old highs. And then when it attacks old highs, right, we're then looking for it to rebalance inefficiencies, fair value gaps, right? So we can see a similar thing here. We attack this high. What happens to price? It comes back down, finds itself within this fair value gap lower. Okay, now I'm not going to go over that in too much detail. If you want to kind of look at the breakdown of what I do, how I trade in my systems, you can see them on the previous live streams as well. And because I always like to give them credit because they have such a big influence in my life. My main mentors, which were ICT and Trader SC, I learned more from those guys than from anyone. So you'll see a little bit of a combination of styles, but what I would say is learn your systems, test the living daylights out of them, find something that's suitable for you, and just know the data inside and out. So what are we looking at here? Well, quite simply, when we're breaking these highs, we're returning, we have these periods of consolidation, then we're looking to move higher, okay? So what we have down here is the kind of original consolidation that price broke out from. We then had this period of accumulation here, an argument that we've kind of got reaccumulation. And now we're kind of saying to ourselves, okay, well, is this the reversal point, or is this accumulation before price moves higher? Now, for me, and we'll see this as we break down to the lower time frames as well, this high just seems too tempting, right, for price. You kind of got this high sat here as well. There's one kind of slightly above it. If I'm thinking like a major player, like an institution, about where I want to kind of place my bids, asks, if I'm looking to short this market, I'd love to kind of trigger all of these market long orders up here, right? Because if these stop losses get triggered, they turn into market long orders. That floods the market with buy orders in here. That means big accounts can step in and fill them with exactly the same or larger amounts of sell orders, avoiding a little bit of slippage, and ultimately price breaks down. So what are we looking for here? Well, one of the things we can look for as well is how price moves above a level. Yeah, so if we take this high as an example, this was obviously a key high. Why was this a key high? Right, this for me was a key high because something clearly stopped the market here, right? Price broke this higher. Yeah, we got a higher low, higher high. Price is looking to get into a buy program. Ultimately, something stopped it here and price came back down. Now, quite often, if you extend that line across, you'll see that you come into these kind of support and resistance areas. So let me just draw this in here. Okay, and we can see what happened, that strong close through this level, right? See this? And look previously, right? Look at the rejections from the wicks, down, down, down. We can see how it offered support here. Deviation, price climbs back above this level, runs higher. Then it kind of starts to stick to the level, right? Here, here, here. We get this move through, we get this retest, and that's how we know that we're probably looking for liquidity lower down. Then when we retest this area here, we can't get that strong close above, and we certainly don't consolidate and we break away. Alternatively, what we did here when we did manage to recapture this level was we get a strong close above, and then look at these downside wicks showing that the buyers have stepped in, all right? So quite often you look back, deviation, price climbs back in pretty much immediately, comes higher to take liquidity here and fill this fair value gap. Same thing here, deviation, price moves higher, takes liquidity from the highs. Now what you can see here, and the difference with this is, look how this move was straight below, then it starts to consolidate underneath, and ultimately we sell off. Now, what we've had here is price has come back above this level. We've got this consolidation and price has pushed up. So what I'm looking for in here is if we're going to get a move in here that allows us to attack this high. So on a daily time frame, I am bullish. I'm then going to drop us down to an hourly here and explain what I'm looking for. Well, if I'm bullish, and this is where sometimes it helps So there's loads and loads of different features of B Pro. I'm by far not the best exponent of it. I do use it and I really love it, especially for its divergence system and for the high time frame trailer. But it's basically a standalone trading system. And if you're interested in it, it's what Crypto Burb uses entirely for all of his trades. I think he's almost £1 million up already this year for his trend trades. But for me as an intraday trader, it can still be really, really useful, because if I'm looking at this here, even on an hourly chart, right, while we're above this grey line, it's telling me that longs are favoured, right? Now, if you can see the blue dots that rest at the bottom of the chart down here, yeah, these are our trading sessions. The orange dots are London, this is New York, and this is New York PM, so AM and PM session. These are kill zones as defined by ICT. Now, this is where we bring together the combination of time and price. Okay, again, I would always recommend going to the key source of that and looking at his mentorship work. But they're pre-designated times whereby we're looking to jump on board the highest volatility and volume entering the market. So if we look at these within our times, we're above the trailer, what can we look for? We can really simply just look for these kind of entries, right? Where we're sweeping liquidity, we're shifting structure, and ultimately price is moving higher up, and we can target the liquidity resting there, okay? Once again, we can see what happens. We don't sweep anything here until the PM session when we get this sweep. Ultimately, we get that expansion higher, right? Now, like anything, it doesn't always work. Of course it doesn't, and that's why we want to always align it with other techniques. So you would have failed here with it, right? You would have got a scalp long here, though. You would have got a beautiful long trade here. This would have got you a winner as well. So two things that I want to stress about this, right? One, the indicator is awesome for that. But two, really all it's representing is your handle on high time frame bias, right? So if we now flick back to the daily chart very quickly, what we can see here is that this has had us bullish since this breakout here. And actually for me, especially since we reclaimed this level here, right? So we've been bullish from here in line with the B Pro. It's helped us favor our longs and shorts. You can see, like any indicator, that it's far from infallible, right? Anybody that tells you that theirs is absolutely full of it. Markets will do what they want. It's just all about finding the high probability setups. Had us bullish here, which was great up until here. Bearish, it caught this massive trend down for us. Here, where it was a bit indecisive, we can see we would have got caught in some chop. However, if we overlay the principles that we're looking at, as I discussed before, the price is moving from external to internal liquidity. What happened here? We ran this. Why did we run this? Now, ICT students will know this as LRLR, which is low resistance liquidity run. Just means that when you see these untapped highs, so this high here fails to run this high here fails to run that, this one fails to run that. When price reverses, quite often you see these big moves up because that's where the liquidity is resting, right? So that's where price can go up and find the necessary buyers, to buy at a higher price than what you bought down here. So with that aside, this is what we're looking at. So now I'm just going to drop you onto the lower time frames. Now, for me, I'm always looking for kind of key liquidity. And where does that liquidity exist? Well, we've just kind of finished the London session, right? So if you're looking for your session liquidity, you can pop on one of these indicators. There's one on here from TradingView called Asian Session Range. Yeah, it's all free. And basically what it does is it just highlights the key periods. I have London, New York, and New York AM and PM. The reason for that, and it won't show you on the weekend because it's a traditional market indicator, but the reason for that is I want to know, say if I'm bullish here, which I am, then I want to know some key drivers for that. So I'd really like to see us take out Asia's low, right? Drive down into here and move away. Okay, but ultimately that's not for me to decide. If I'm bullish here, and we have to remember our same principles, we've taken a high here, we've broken down, we've taken out these lows, meaning that the probability is we're now moving back to internal liquidity, right? So in Asia, the trade was long because we took out this low. Now, the theory is we were either moving to rebalance this fair value gap or ideally this one. Why ideally that one? Because if we overlay our principles of premium and discount, then we can see here that we're favouring longs from the bottom half of our range and favouring shorts from the upper half, meaning that just outside of our London session here, we kind of got 9 o'clock this morning. We got this nice kind of shorting opportunity coming back down. However, that wasn't the interest. I'm looking to remain in line with a high time frame trend, right? So for me, what I'm looking for are these corrective moves to then trade higher. So with those elements on my side, I need to then work out what my risk profile is, right? So as I'm looking at this and I'm saying, okay, well, where are we at the moment? Well, price is kind of being held by these fair value gaps. right, on the hourly. I'd love to see something like this, where price comes down here, we get this reclaim. Yeah, something like this, where we set a low in there, we sweep local liquidity, have that breakout, and then we look to move higher. All right. But if we don't get that, then we need to be aware of where our liquidity is resting at the moment. That's under the London session, right? So I'm just going to pop this on now to a 15-minute and say, okay, what else do we have in play down here? Well, remember, like I said earlier, we have these untapped swing lows, right? So we're going to put our dollar signs on there and change that line to green. So this provides a really nice area here. We've got the liquidity resting between London lows. I haven't really seen the reaction that I'd want to see from that. We're about 13 minutes away from opening the pre-market for the New York trading session, which is where I want to start being involved in looking for these setups. So the ideal scenario is we take out Asia's low, we come back within Asia's range, which is telling me that we're showing strength here, and then we can look to target these highs and ultimately up towards a high time frame target, which is these equal highs, and also further up, which is this line up here. All right. So what happens if we reverse here? Well, then I need to understand and appreciate my risk. If we reverse here, yeah, I do like to see a local low swept. So for example, we've swept this, right? So if we've swept this, then what I'm looking for is a shift in structure. So I would want to see this higher. This high is really important as well because this is an intermediate term high, meaning it's a high that's rebalanced to fair value gap. So if the market is bullish, technically we shouldn't be seeing price action above this. So if from here, and we move into our trading session, right, we've swept liquidity from here, I would want to see a high energy move above, leaving displacement, right? What that means is I want to see a fair value gap, swing failure pattern, reclaim, deviation, move up. Love it. Yeah, Robo, exactly that, mate. Swing fail, meaning that you've ripped liquidity from one side, you reclaim, you step back in the range, people are still in a little bit of shock and awe, their stop losses get taken out, you move higher based on that liquidity, then the market starts to turn in your favor and you'll kind of work out that you're on the right side of the institutional order flow. So basically exactly that in a very, very nice, easy terms to understand there, my friend. So that's kind of what I'd be looking at here. And I would just be aware of things like this high as we move up. Okay, we're coming back into an area of resistance here in this hourly fair value gap. But if we get our trading set up, and I would actually be looking to take this on the 5 minute, yeah, then if we get that trading set up in here, and like I said, I'd want to see a fair value gap, then really I just need to know where my risk is. So let's say for argument's sake, we get our setup over here and we've got this swing low forming down here. So we form that. And I would just want to know that at this first target, yeah, I've got a 2-to-1 risk to reward there, meaning that I can move my stops to entry, yeah, to my entry price, meaning that if I'm wrong here, and I can take a bit of profit if I want to, that's totally up to you. If price reverses down here and takes me out, my trade is risk-free. Yes, you'll get caught on the wrong side of those sometimes and price will come down, wipe you out, and then absolutely go to the moon. But, you know, what I would say is you just need to find out in testing if that's something that's really affecting your system or not. So with that in mind, that's what I'm looking for there. Did anybody have, just to finish up, I'm going to try and find this for Nick, I believe, which was it Robo Monkey, maybe? So SAIT. Let's have a quick look. No, or maybe it was SAIT. Was it Wrapped ETH? Was it? No. It is Robo, mate. Do you know what the ticker is, mate? Like, for example, you know, BTC, USD, T, for example. If you can give me a little heads up with that one, mate, then I will take a look. Let me just pop on to another one, just while we take a look at that, and we can move back as soon as, if Nick's able to find the little ticker for us, that would be ideal. As people know with that, I'm not particularly good with those with those alts, but they're all very highly tradable. Another thing that I just want to kind of comment on very quickly while we're here is just taking a look at our... oh, wow, okay, so maybe it was the whole name. Let's have a look. But yeah, just quickly, also the dollar index, right? If the DXY, the dollar index, is looking weak. And my concern here, where this might have been showing some strength, is we were looking to kind of inverse this fair value gap, which we did, which is why it's purple. However, we're still in the realm of finding support here, and realistically as well, I mean, we're kind of, in truth, looking at it closely, we've really got to make an allowance for this order block here as well, because it kind of does hold that one in there as well, right? So prices are now drawn into this, moved away, bodies have respected this. However, past the equilibrium, showing a bit of weakness. So what are we doing here? We've taken external liquidity in the form of this low. We're now moving into internal liquidity here. And ultimately, we could be looking for lower prices, which is good for risk assets, all right? So let's have a look here. SAIT. There we go. Well done, mate. Perfect. Right. So let's have a look at this beast then. Here on Phoenix. Okay, this is interesting. So we can see at the moment on a daily scale, we're still bearish, right? And that's obviously shown to us by the B Pro. But obviously, if we flick that off as well, we can see the price is just respecting these bearish arrays, right? Meaning that we've taken a higher here, price came back down within line with our theory to rebalance this fair value gap, right? Which would be grey. So we take this high here, which we sweep. So our theory is that price is rebalancing this fair value gap, which it does. We then expect higher prices here, which it fails to achieve. Price then draws back down into here. Our first sign of weakness here is if we take our Fibonacci and we draw our 50% line across it. We can see when we close below it here, look how it very quickly turns from support here, close below to resistance here. Our expectation, especially when we close below it here, is for lower prices. Now, I know price ran down here and had this bullish reaction, not making this overly clear, but we have to stick with our principles. And then while we're delivering, and we've delivered through this, once we've closed below here, this becomes an inverse fair value gap, meaning we expect that to act as resistance. So now what we're saying to ourselves is, okay, how is price reacting here? Have we taken external liquidity, right? Which we have. We've run these lows. So our expectation now is for price to head towards internal liquidity, right? Which is this fair value gap. Now, we've just kind of engaged with this, right? So the draw is currently higher towards this. Now, we don't know exactly how far up this is going to take us. But let's drop down to a lower time frame. Let's see what this is telling us on the hourly chart. Because what we can see here is we've had this really, really big rip, right? We've had this period of consolidation here. Right, the market pumped once, kind of came back within the range. Then we've had this really, really rip straight up there. There's a really handy setting now that you can tick so that rectangles automated. Yes, yeah, there is, mate. There is. It just really stitches up my fair value gaps and stuff like that. But that is a great bit of info from Julian there. So there's some settings now. Was it in one of the most recent Trading View updates? Was it, Bud? And basically, you can put a setting on, like you can do on a Fibonacci, to show the trend line. You can put it on so it automatically draws you out a midline. What I do typically with my fibs is, let's just say I'm looking at this here to be our dealing range. Why is this our dealing range? Because we've swept liquidity from the lows, right? And prices then obviously swept liquidity from the highs, and we've set up some down close candles. Oh no, welcome, my friend. And then we've set some down close candles. So what have we done here, though? Ultimately, look at these equal highs here. We've run liquidity above them, and then that cluster of equal highs here, yeah? So if we're looking for higher prices here, for me, this is really, really simple. So I've set this up. Let me just draw this in first. This is a really good one to review, actually, Nick. Thank you for the recommendation. So we're drawing up higher, right? This grey box is our daily fair value gap. That's our draw on price, right? However, we don't want to be longing up here, right? Because we've just left this big inefficient move. So remember what our theory is, right? We're looking for price to expand higher, take out a higher, and then if we're bullish, we're looking for price to come back down to rebalance the fair value gap and then move higher, right? So with that in mind, we've got our target in here, yeah? Now, if we want to be, on point with this, and we draw this up as our premium discount range, in an ideal world, we'd see a dip just a little bit below that line, right? However, crypto is super volatile. We are very much in a kind of real buying environment at the moment, right? So we might not get that full pullback. However, that is what I would be looking for. So let's move that aside for a moment, and then let's drop this down onto, say, a 15-minute chart and see if that gives us any more information. Well, we can see at the moment the price is starting to kind of come down. What have we done? Same principles, right? We've run this little high here. We've broken down. We're about to set a fair value gap in here. So we could see this kind of, I'll overlay on this one, we could see this kind of staggered move down, right? Which would be good. And what we would then like to see is within our trading session is this reversal, right? Yeah, so that we come back up and then delete that one quickly. And then within here, this expands higher, we get our fair value gap. And then price comes down to engage with that. And that gives us our buying opportunities. Yeah. So that's what I'd be looking for there. Let me just get rid of that quickly. And we'll just take a very quick look at the 5-minute chart as well, which is my real go-to for that. Now, if price is going to show a lot of strength here, and it really, really, really wants to rip higher, and again, I'd have a little eye on what Bitcoin's doing and stuff like that as well, then at the moment, we're delivering from this. So let me just do this in red very quickly so it stands out a bit more. We're delivering from this bearish fair value gap, all right? So while price is drawing into here, our expectations for lower prices. However, if we get a strong bullish close above it, obviously try and draw it better than that. Yeah, strong bullish close above it. What do I mean by that? Like a high volume candle, yeah, where the volume's in the body. So not too much of the wick. We don't want to see a big long upside wick. Tells us that this is kind of getting suppressed. But I'd like to see a strong close above here. And then I might consider some lower time frame scalps higher. But in truth, you are kind of taking a little bit of a risk there. The absolute ideal scenario would be to wait for this to draw a little bit deeper into here. Yeah, and then to see some kind of reaction. And then what we're looking for here is in a sweep on some liquidity, a return to an inefficiency and higher pricing. That's purely because if we take this setup down here and we're wrong, price is probably going to look to run liquidity resting above these highs, right? So if we get in down here, just for argument's sake, that stops below these lows. Probably wouldn't want to see it as that equal, but it's being pedantic. Right, and we know we can run this thing up, even if it's back to the equilibrium of this inefficiency, right? But ideally, you're thinking, okay, price will probably look to trap people above here before reversing. Then you want to know you've got a good risk to reward. If the risk to reward is on your side, when you get to your first target, which might be this fair value gap again, you can move your stop loss to entry at 2R, meaning that if the market decides to go against you and rips through your stop loss, then you're out of the trade for free, or you could have already pitched and posted a little bit of profit. All right, so that's what I would be looking for on that, Robo Monkey or Nick. I hope that's been helpful, mate. Burned, you legend. We're literally on here for about 2 more minutes, mate. But what I am going to do is I would like to ask for your opinion on Takeda. Okay, mate, let's have a very quick look. This is the last one we're going to do today, guys, because I do need to crack on and get everything ready. Well, not just me, obviously, but me and the team getting everything ready for Congress launching tomorrow. So again, do take a look at that in the description below. Do pop on the Twitter and get yourself involved in that. There are tons and tons of giveaways, free access to the entire Discord, the entire trading team, all of our calls, which last, what would you have done? If you'd had $1,000 account last month, you would have earned about $680 on that. Just taking the team's calls, right? So that's 68% profit on that, which I think is pretty impressive. And we've been profitable every month for quite some time now. All of these are posted, or you got full access to it, full transparency. But great opportunity to come into the group while it's free. I want a PC t-shirt. One day I'm going to make one for you, Bernd. I have my own range of of merch. So what was it? So Takeda, Takeda. Takeda. Pharmaceuticals. Is that the one, Robo? Let's have a look. I would probably take this on the stock exchange, to be honest. Awesome. Wicked. All right, mate, let's get a nice, big, juicy view on this. Now, for this one, being a traditional market asset, I'm going to zoom out that much more, right? And actually, even out to the monthly here, right? The price is fractal, so you can put these across different time frames, right? And look for the same principles, okay? So what do I mean by that? Well, what do we have here, right? Price runs this low. doesn't quite come there. It runs that low as well, which is an even more key low. So external liquidity, what are we then looking for? We're then looking for internal liquidity, right, in the shape of our fair value gaps. So we've run that low. Now I think what's quite interesting here is we never took out these highs. The equal highs there on the monthly. So this has really done its job in terms of suppressing price. The other thing that we're looking for on any time frame is when we close above it or below it, then if we're in a downtrend, we're looking for the up close candles to suppress price, So this was a really key, well, not really key because it wasn't high probability, but it's ultimately looking to defend price. What makes a high probability order block? It's probably this one here, actually. Why this one? Let me tell you. Because this one here, and you do it the body, the wicks, I'd recommend just kind of looking into that yourself and definitely testing it. But we've taken liquidity here, right? Now, you probably want to see key liquidity taken, but if you take liquidity here and price then breaks down, ultimately look at the retests on this area before we sell off. When we retest it again, the high probability trade is then to the downside, all right? But what I find interesting here is that we've taken internal liquidity. Well, we've taken liquidity in the form of this high, but also this local high, right? Now, in doing so, we've then taken external liquidity. We've come back in, meaning that we then say to ourselves, okay, price is almost certainly then looking for internal in the form of this fair value gap, right? So at the moment, price is being supported by that. Also, remember what I said about high probability order blocks, which is this. I'm going to do this in a lighter blue just so it's not so obtrusive. But this is these down close candles into a support level. Sweep liquidity, break away, leaving a fair value gap. That's the dream there, meaning that if now on a monthly scale, when we're looking at this, I'm now looking at that with much more open eyes, thinking that this thing could be looking to go higher here, right? If we find support in here, I think we move up. If not, I think we're looking to come back down for these lows at least. So on a weekly scale, do we have any more information? So we can see here, ultimately, price did what? Took out this high, broke back down, took out this low, came back to find internal liquidity, right? Internal to external, which is taking out these lows. And ultimately, we've now broken down from them. So I think price is probably drawing higher to this area here. I'm just going to delete these for a minute, just so that we can keep this nice and clean. So on a weekly scale, we've got obviously this really big fair value gap here. But we would also be aware of the ones around it as well. So as we look for that, price drawing up higher, is price currently drawing to that as an inefficiency here as well? I think it very well could be. As we move down here, obviously onto the daily chart, we can see a lot of gapping. And obviously on a lot of these traditional market assets and that, they really are traded on a much, much higher time frame. So scalping them, for example, can be quite tricky. But what I would say here is the same kind of thing and in fact, I think Nikki is just saying to look at, she'll do very quickly, TAK, TAK755. No, I've got, unless it's this, hang on. TAK, no, I've not got that one, mate, I'm afraid. TAK755. But regardless, I know we don't have a lot of data in here, but if we're looking at this in terms of a structure, then if this is our draw, right, then what we can see here is we've got this kind of almost an intermediate term high here, right? We've taken out liquidity from a low there. I think a break above this would be showing strength. We would look for this to kind of hold around here, and then ideally something where we get a little sweep on liquidity, and then we look to move higher, and we can always just adjust that at our first target, right? The reason for that doesn't mean the price isn't going to come above this, consolidate and move higher, but we want to do this in a not a ticket. All right, mate. Thank you. A study they got approved for, TAK755. Awesome. So merge of fundamental news along with technical analysis as well, which is a really, really brilliant thing when you can combine the two. Also, when we look left, we can see we're kind of filling this inefficiency over here and kind of coming into this key order block here as well, which we haven't quite tagged. So on a weekly scale, maybe we do just kind of dip a little bit lower. But what I would say is, however and whatever time frame we were looking at this on, for me here, if I was looking at this, I would be saying price can be drawing up to one of these two inefficiencies here. I think if we start closing above them and showing strength, I think then this thing could really, really be starting to take off. Obviously, this is a weekly scale. You'd want to decant this down onto a slightly lower time frame. But I would just be really looking at where your key liquidity targets here are and your inefficiencies and saying, okay, well, if price has taken key liquidity below an old low, chances are it's searching out an imbalance. Yeah. Which are these fair value gaps that we've got in here. And in the same vein as price has taken liquidity here from this low, then the likelihood is that it's going to cool off a little bit, look to kind of reaccumulate in here before distributing lower again. All right, guys. So look, a little bit shorter and punchier today. I know. Hopefully you've enjoyed the format. Just wanted to jump on and go live with you guys again. Just before we fly into Congress tomorrow. So we've got tons and tons of amazing stuff coming up. Speakers being announced. So do please keep an eye on the Twitter if you are interested in anything to do with the Discord. Remember, you can join it for free for the whole of the week of Congress. Yeah, you can just get in, you get complete access, you get all of our calls, all the trading team, all the analysis, everything that you like. Really make your mind up if it's the kind of environment for you. And also you can find me on Twitter as well, BC_Richfield. All right, guys, just lovely to see you on here. Brilliant to see some new faces as well. I hope you found it valuable. I look forward to seeing you guys in and around Congress. And if you've got any questions, please don't hesitate to reach out. Have a great day.